All right, welcome back to Metropole Television. We are putting those 2020 economic survey numbers into proper perspective this morning. You want to have a say at Metropole TVKE across all your social media platforms. We are still with Gabriel and George. Let's get to the final part of the conversation this morning. All right, Gabriel, let me start from where George cleared. In fact, let's look at that trend in a cement construction, because that's exactly what KNBS used to give us those figures in terms of how the construction sector did develop. Again, in 2020, you will see that indeed production was high, and you can also say that consumption was also fairly high. And at 2020, in fact, as of March 2020, that's when it was at its highest. When you look at that trend, then you will say that this is a segment within that sector that was really doing well. That's why we're not surprised by the numbers that Bamburi Cement was giving us in the half year and full year for last year as well. But then let's come back and look at exactly how the government has spent in terms of expenditure vis-a-vis GDP growth. Let's look at that, and you're going to see there's a big disconnect indeed, that all the way from 2015, that's when we're spending the highest. You will see that as from 2015 all the way to 29, I was dropping, and that exactly dropped again in 2020 as well, saying that regardless of how much the government really spends, it doesn't translate to that GDP contribution. Again, if you look at exactly where we are in terms of that development expenditure, again, you're going to say that it has been somewhat hot and cold, but you will say that it actually did increase in 2020, and recurrent expenditure also dropped within that period in 2020. Gabriel, when you have sectors like construction sector being said to be the biggest contributors to your GDP, when you have the financial services sector also being the biggest contributors as well, health services also being the biggest contributors as well, do we want those to be the biggest contributors going into 2021, or you want your manufacturing, your agriculture to be, your transportation and logistics to be the biggest contributors? Which ones reflect the real direction of the growth of the economy, Gabriel?
Okay, thank you for that question, Simba. So just to be clear, the Kenyan economy, if you actually break down GDP further, is actually a service-driven economy. So things like health sector being big drivers is actually a very good thing during such a time. I know Kenya has a few pharmaceutical manufacturers here who are doing very well.
Yes.
The likes of Revital Health, they're producing all, even the syringes used for this vaccine. They're doing very well, a few companies. And so that service, any service industry that is doing well is always a key, it's always an attractive point to note. On to the sector you've really referred to is the cement sector. First of all, unfortunately, cement production is also falls under manufacturing.
Yes.
So it's also a plus to the manufacturing. I think you saw Nairobi Business Ventures now has a cement manufacturing company, so that's still manufacturing. Now the challenge is, where is this cement going? Because there are two ways to look at it. One is that when you look at construction sector, it's sort of laying the capital or infrastructure that is going to result in growth in later seasons or episodes of the economy. Now the challenge is that since 2013, this came in, we've seen that the capital investments they're making are not really giving us the return we need.
Yes.
So, a lot of cement went to SGR, a lot of cement has gone to other roads that are not really directly translating to the economic growth that we look forward to. So what that means is that they're taking active money from the economy, from the local borrowing, and then putting it in long-term projects, which, this SGR has been with us now for very long, almost 7-8 years. But we're not seeing the return, 6 years actually, we're not seeing the return that we would look forward to, or that we would actually be enticed by. So we can say it's the same. The cement is not going to translate into a one-to-one sort of economic growth. If anything, the traffic jams caused by the construction of the expressway will actually result in less economic return in the short-term period. And then in the long term, the same expressway fails to give us the economic return that we're looking forward to. It only increases the outflow of money from your pockets and mine. So that's really how I look at all these various things. So growth in health services, excellent. Growth in agriculture, excellent. It means a few bolts have been tightened here and there. But then growth in things like cement, which is not for the public real estate, it's a private real estate, it's actually for government infrastructure, is really not what I would be expecting to see at this point in time. If anything, I would have expected the government to actually cut its development expenditure and actually assist other more profitable sectors in the economy recover. Things like coffee should have been supported, tea, whether it's export, all those things should have been supported. And then, as I always say, channel capital to the private sector. And not, in short, if you cut the infrastructure costs by half, no one would miss those highways. No one would say we've slowed down, because that money would have actually gone to other sectors that need it most and that actually deliver more profitability. That's my take.
Fantastic. All right, gentlemen, let's move into the next area that is a key pointer to that contraction of the economy. I'm going to look at them in a tandem. Let's talk about the inflation numbers, and we're tracking them all the way from 2015 to where we cleared the year at 2020. We're talking about the annual inflation trend, and you'll see exactly where it is. We're talking about closing at an average of around 5.4% in 2020. Good. And then again, let's jump up to where we are in terms of employment numbers again, because we do know from that report, employment dropped negative 4.1% to 17.4 million outside agriculture and pastoralist activities. That's what they said. So we're talking about 83% in 2020 employment recorded in the informal sector. That's a huge number. And they're also talking about 2.5 million jobs that were recorded in the formal sector. So we're talking about that inflation again, if you attach those two, rising to 5.4 from 5.3 in 2019. Fine. All right. Let me begin with you, George, on that as well. When you look at these employment figures, do they reflect the reality of the effects of the COVID-19 pandemic on the corporate sector and as well as the informal sector in 2020? They're saying 17.4 million jobs were recorded outside agriculture and pastoralist activities. It's a healthy figure going by the adult population that we have in the country, going by the latest census figures, George.
Elijah, our employment figures, I've never agreed with them per se. I don't know if that is I'm the only one who has that perspective.
Why, George? Why?
The informal sector employs almost 80% of our workforce in the economy.
Yes.
The other 20% goes towards the formal sector. If you look at the formal sector alone, Elijah, most companies last year shed off quite a number of employees, but leave alone the total shed off. The companies that retained their employees but at very minimal wages, or half pay, or even quarter pay, so to speak. And the major companies that were affected were companies in hospitality and tourism. We had companies in media. Remember the case that we had with K24, or something like that, and several other companies in the manufacturing subsector. And therefore, there are those who lost their jobs totally in those industries, but there are those who are retained, but either at half pay or quarter pay, which still count towards unemployment. KNBS says that we lost 700,000 jobs in 2020. I want to believe that it could have been higher, given that a bigger percentage of our workforce are in the informal sector, where you cannot really quantify how many people have lost their jobs.
Yes.
But Elijah, if you take a casual walk around our estates, especially Nairobi, you'll realize that most of our casual laborers, or most of our informal workers, lost their livelihoods or lost their employment in 2020. Of course, 2021 is starting to build up again, but I think we lost quite heavily in the last 1 year. This reflects on, if you look at what Kiage was able to recover in terms of pay as you earned last year, then it reflects that shift in employment level. So I tend to agree with most figures that KNBS has given us over the years. But unemployment figures, I've always thought that there's some what we call cooking of the figures to reflect something. That is just my view, Elijah. Unemployment in Kenya has been a big issue over the years, and in fact sometimes it's a political issue, so to speak. And
Yes.
therefore the mandarins in government sometimes try to massage it so that it doesn't appear so bad. But I think if you look at our youth graduating from the universities vis-a-vis those who are eventually absorbed in the workforce, then there's a big disconnect, a big disparity between the two. That notwithstanding, Elijah, let me comment on something on our inflation figures. I think CBK and by extension Treasury has been able to maintain our inflation rates between 2015 to date quite well. That one we must give to them. In
Yes.
fact, our inflation rates have ranged between 3 to 5%. Of course, last year we had 5.4%. If CBK was able to maintain our inflation rate at 5.4% last year, then I think it is it's a good indicator that they were able to manage the money market quite effectively in the last 1 year. I foresee maybe the economy maintaining it at 5.4% or a few basis points above that as we go into 2022. Of course, that is with the help of the Central Bank of Kenya and the extension, the Treasury. So the challenge is still with the government, that how do we rebuild our employment figures going into 2022, 2023, and how do we maintain our inflation figures to where they are, or even reducing it? And then how do we now start jumpstarting our economy to record at least a positive growth going into 2022, 2023? Remember, the last time that we had a negative economic growth was in 2007, 2008, when we had the post-election violence. All these other years, we've recorded at least some good economic growth, or a bit of plateauing, especially in 2017. But all along, I think we've recorded between 4 to 6% in terms of our GDP growth year on year, Elijah.
Pretty much. All right, Gabriel, let's clear this conversation this morning on the same area that George has cleared on. If you look at that figure, I would like to read for you that particular section. As in, employment dropped just negative 4.1% in 2020 to 17.4 million. But then there is an addition to that statement: outside agriculture and pastoralists' activities. Out of that declared like this, 2.9 million jobs were recorded in the formal sector in 2020. I know you've been a big critic of the CBR. Would you say, again, as you respond to that additional information now on unemployment, would you say that it's been quite active in sort of standardizing the inflation rate in the country to close at 5.4%, just 0.01 basis points above where it was in 2019, Gabriel?
Thank you for that, Simba. So I think the inflation figure is really, I think what I personally would like to be seen is, how do they, and I think they do give detailed numbers on their monthly or quarterly reports, in terms of the basket of goods that they're tracking and what results in this inflation. So I think it's relatively been stable. You would feel it. It's you and I every day are spending money, so you could feel it. So I think as much as expenses might have gone up due to currency depreciation, I think the inflation numbers add support that,
Yes.
you can tell the trend has sort of been consistent. I think I'm of the same sentiment as George as far as the employment numbers go, because if we're saying we can't tax the informal employment sector, then how can you claim to then have accurate numbers on how many employees they are and all of that? If you actually have that accurate data, then why are you not even looking to tax that sector? You're only focusing on the formal sector. So then the unemployment numbers are much likely to be higher, because if you look at the enrollment numbers in the universities and TVET institutions in the same document, we're talking about at least 200 to 250,000 people graduating every year. So then where are you taking these people? If you've just lost 700,000 jobs, we should be saying at least half of that 250 did not manage to secure a position. So that number is bound to be much, much, much higher than employment numbers. So inflation numbers I can buy because we know they track the fuel, they track the food and commodities. 2021, I expect the quarterly and half numbers to be a bit higher, but for 2020, I think 5.4 is fair because you see what happened is your normal basket of goods, more people were trying to supply you the same goods. So if it's your cabbage, there was a roadside guy, there was the mama mboga, and there was the farmer now who's trying to also deliver them directly. So that competition might have shielded us from a bit of inflation. But going in the long term, 2021 might be higher, I expect. But yeah, let's hope the quality of numbers improves and even more than that, the faith of people in their numbers, the faith people have in their numbers rather.
Pretty much. And also hope that they don't delay anymore. It's been 4 months. Delay, Bona.
Yeah. True.
All right.
True.
George and Gabriel, we end here. But then, there's a conversation that I may want us to have next. George, the rebasing of our GDP, we've added 500 billion to the economy. But just as a teaser to that conversation, let's look at the top contributors to our GDP in terms of sectors, because that's where the question comes from. Like, where do you get this extra 500 billion? Agriculture, we've known it's been our biggest contributor, will continue to be. So it contracted again in 2020. So where do we get that additional money from? Manufacturing has always been contracting, George. We never hit that figure that we want to hit. All right, let's go to transport and storage, contracted heavily in 2020. Wholesale and retail repairs, maybe. Real estate has been on a downtown. George, you and I have been speaking about this. It's when they're trying to correct. In fact, they are saying maybe in 2024, that's when we start to see the real figures from that. Financial and insurance activities, maybe we can get some money from there. But so the question is, we've rebased our GDP, we've added 500 billion to that. Question is it so that we can attract more loans into the economy, or indeed, yes, we've added that since our last rebasing? It's a conversation that we want to get into at this time and point. Let me say thank you very much to George and Gabriel for making time to talk about those 2020 numbers. We do appreciate you, sirs.
Thank you, Elijah.
All right, on that note, it's a good morning. My name is Simba Kiage. Good morning.